So the Nvidia conference call was yesterday. Today is Thursday. The stock's down 3%. The market just closed. Our impressions of the call, we want to talk about the dichotomy between what's going on in the industry and how the market is pricing this. And then we want to talk about some of our thoughts. It's not even on podcast. It's November 20, 2025. It's Krimdelko. For the year, we are up 6%. The market is up 12%. We're underperforming by 6%. Nvidia's call yesterday was all about Jensen making the case for an industrial once-in-a-generation change in the way industrial activity is changed globally. So that's really what's going on here. There's a couple of things that we want to talk about here, but fundamentally, I think Nvidia is building a token factory for compute-driven AI that is going to change everything we do on the cognitive side and the real-world side. And the question that the market has is, well, is this sustainable? Can one company keep growing at the scale and speed? And should we start pricing in maybe some sort of correction or something like that? I think that's really what the market is concerned about here. In my opinion, the concerns are way overblown, and they have been fueled by the industry itself, particularly Satya Nadella and others who are, for one reason or the other, not happy with Nvidia's leadership. I don't know the details. Google, for example, has been trying to market itself as using its own TPUs versus Nvidia. These things are understandable. There's probably some vanity and ego involved. But if we just look at the economics, so forget vanity, forget ego, just look at the economics. Nvidia delivers the most token per watt, the most token per dollar, and the most versatility. And that's the most important thing when it comes to training, pre-training, post-training, and inference. You need versatility because as broad as you get, you get broader and broader with intelligence, the more versatility you need, the more flexibility you need, and the more Nvidia can deliver that with its flexible platform. So that's definitely one of the most important positive facts of Nvidia. We've said that many times already. Nvidia is the lowest cost supplier in a commodity business. So that's one thing, but it's not just that it's the lowest cost supplier in a commodity business. Actually, Nvidia is not even in a commodity business. They're offering something that nobody else can offer, which is flexibility and versatility. What does that mean? That means that you have flexibility in pre-training in terms of what kind of models and architectures you're going to use, what kind of data to use. AI, the more you think about AI, the more you have to start thinking about the kinds of data sets that are going to be used to train the models. And the more we are going now from scraping the internet into very specific types of AIs, whether it's legal or finance or healthcare and then real world, the more special the data sets will become, the more versatility you need on the pre-training and post-training. And then inference, of course, is even more exponential, because with inference, you have this problem that you have an amount of intelligence available to be used and sold, and you have millions and millions of customers with all kinds of different needs. And hopefully, and this is now a hope that also Jensen mentioned on the call, we will have exponential growth in inference, because that means an exponential growth in usage, and therefore we will have actually economic interests that are being pursued here. It's not just hot air. I think one of the most important things that Jensen said on the call was that he said that most of the AI which is now being deployed is just replacing recommender systems. So whether it's search or traditional recommender systems, so systems that already have been in place over 2 decades since the internet picked up. So recommender systems are Amazon recommending you what to buy, Facebook moving advertising and messages, X moving messages, that kind of thing. It's been around, and that is being now moved into Gen AI. And what that means is, for example, Grok is going to analyze what's being written on X and serve you what it thinks is the most important thing. So whether you call it Gen AI or recommender system, it's going to be driven by this new type of AI, which is driving the inference, not just inference, pre-training and post-training, but also inference compute. So that's really important, because what Jensen said is that most of the deployments right now are just replacing traditional, collaborative filtering and things like that with Gen AI. Now, with this growth in Gen AI, you also have more semantics in the recommender systems. So they're getting better. They're getting, for example, X is claiming that hopefully soon you will be able to be served really what you care about, and not just the X posts that are most popular. And that requires some sort of semantics that we don't have yet, and that could come hopefully in the next 6 months. And therefore, we have this massive need for more compute and more infrastructure. What really drives NVIDIA's business is that the fact that they're a low-cost producer in a commodity business, and they also are the best quality producers in a non-commodity business. What we mean with that is that if you just want to train something, if you just want to run compute, you're the lowest cost producer. And if you want versatility, which almost everybody wants, then you also want to use NVIDIA. So on the question of whether competition is catching up, they really aren't too concerned about that. Now, let's talk about the market a bit, because the market doesn't seem to care. Yesterday, the stock was up 6% post-market. Now it's down 3%. So 10% swing, $400 billion in market cap swing in 24 hours. These are extreme moves. And the question, of course, is why is that happening? And the answer is always the same in situations like this. There is leverage in the market. There are liquidations. People are selling, and they're not selling because of fundamentals. They're selling because they have to. And where it's coming from is hard to say. It's not surprising. We also had actually cryptos selling off massively in the last 2-3 weeks. So it's probably coming from that front, leveraged players that like to play in Bitcoin and Nvidia and Tesla, those types of stocks. They're being hurt, and unfortunately, that's what's going on. We as investors are exposed to these types of situations, whether we like it or not. At Orange Capital Partners, we're long-term investors. We've been holding Tesla since more than a decade, but we also have to deal with volatility, and it's frustrating. The purpose of this podcast is to give people a sense for what it feels like to run a hedge fund, and this is how it feels like to run a hedge fund. Like you sometimes don't have control over your destiny. You don't have control over the investments. You can't just logically connect the dots and say, because of this type of research, we concluded X, and therefore we're going to invest and make money. It doesn't work like that. The one thing we control is always its transactions, so we can actually buy and sell. That's the only thing we control. But like we said many times on this podcast, in fact, we only control one thing, which is what we buy, because we hope never to have to sell. And the reason we don't want to sell is because if we're right about our investment, if we have a generational company that generates much higher returns than anything else we could buy, then we should never be forced to sell, except, of course, if we have leverage. And leverage is not just the kind of leverage where you borrow money from the market, but it's also the kind of leverage your cost structure, your lifestyle, all that kind of stuff. And, we're trying to keep this very tight. We sometimes have conversations internally that, we're not even, are we rich? Are we poor? Our lifestyle is kind of bound. And the reason it's bound is because we are very careful about our cost structure because of the high volatility. So it kind of binds us almost towards a situation where we live way below our means because we have this high volatility. But that's for a different podcast. Back to NVIDIA on the market. So we have this fear of a bubble. I think the bubble has been, it's been certainly uncomfortable, particularly since OpenAI has started talking about all these ridiculous investments that companies are making, such as Nvidia and AMD and these corporations, and where they're pulling themselves out on their own hair kind of thing. That's concerning. We are incredibly concerned about OpenAI. We don't think it's a real company. We don't think they have the substance to sustain themselves as a leader, just because they don't have the leadership. It's very simple. They have uneducated, unethical people who run the company. The board is full of unethical people. This is not a good situation, and hopefully this will be sorted out without too much pain, because there are other companies, Google and X and and many other companies, small companies that are real. This is a real thing. AI is a real thing, but the one company that has sparked all this excitement, which is OpenAI, has turned into a cancer, and that cancer needs to be surgically removed. And the market will do that. And the question, of course, is how much pain do we have to go through until that happens, and how will it happen? When we go back to the internet bubble, there we had AOL and Time Warner, which were kind of sort of the leaders in the froth, and that didn't turn out really well. So hopefully it's going to be less painful. The reason we are much more comfortable here is because, of course, this AI boom is a lot more broad. It's nationwide. It's global. Everybody is participating, and there are real values to be gained. There's real productivity gains to be had. So this is real. This is not just banner advertising on websites that are useless. This is real. But again, OpenAI is the problem. It's the tooth that hurts, and it needs to be pulled. And the market is in the process of pulling that tooth. And in the meantime, we have to sit tight. And one thing we have on our side is actually performance. Whether it's Tesla is delivering Robotaxi and better FSD and better cars and better sales, or Nvidia keeps growing and delivering the numbers that they deliver, that's going to help us sustain some of the pressure. And then hopefully also we have a resolution in this, let's call it frothy situation around OpenAI and some of the other companies, such as Anthropic, but particularly OpenAI. Thank you.